Starting as early as 2007, currency traders at several multinational banks formed a group that they dubbed the Cartel. It's perhaps fitting that they chose that name, as it aptly describes the brazenly illegal behavior that they were engaged in on a near 5-year basis. Almost every day, for more than 5 years, traders in this cartel used a private electronic chat room to manipulate the spot market's exchange rate between euros and dollars, using coded language to conceal their collusion. They acted as partners rather than competitors in an effort to push the exchange rate in directions favorable to their banks but detrimental to many others. Now, the prices the market sets for those currencies influence virtually every sector of every economy in the world. Their actions inflated the bank's profits while harming countless consumers, investors, and institutions around the globe, from pension funds to major corporations, and including the bank's own customers, who placed their faith in the market and relied on it to produce a competitive exchange rate. As a result of our investigation, 4 of the world's largest banks have agreed to plead guilty to felony antitrust violations. They are Citicorp, J.P. Morgan Chase & Company, Barclays plc, and the Royal Bank of Scotland plc. These 4 banks have acknowledged their role in this conspiracy and committed to changing their corporate cultures starting at the highest levels. They've also agreed to pay criminal fines totaling more than $2.5 billion, the largest set of antitrust fines ever obtained in the history of the Department of Justice. And the fine that Citicorp alone will pay, $925 million, is the largest single fine ever imposed for a violation of the Sherman Act. These unprecedented figures appropriately reflect the conspiracy's breathtaking flagrancy, its systemic reach, and its significant impact. A 5th bank, Switzerland's UBS AG, has agreed to plead guilty and pay a $203 million criminal penalty for breaching the non-prosecution agreement it entered in December 2012 regarding manipulation of the London Interbank Offered Rate, or LIBOR, a benchmark interest rate used worldwide. The breach of this non-prosecution agreement was based in part on UBS's fraudulent and deceptive currency trading and sales practices related to the foreign exchange markets, and its collusion with other participants in the FX markets, and its failure to take adequate action to prevent unlawful conduct after prior civil, criminal, and regulatory resolutions. In other words, UBS promised in other resolutions not to commit additional crimes, but it did.